Hey traders, you're starting to see a little bit of profit taking in your oil. Don't forget, if you want to learn to trade, go underneath. We're live on Zoom at the moment with our Academy members. Second green candle and growing momentum here. And I mentioned dip buying as a means of accumulating longs, and that's absolutely preferable. The only thing you do have just before some US data later, well, not too long now, and some EU news, you've got this really early resistance. You've seen rejection there, second layer of candle wick. So I think the market might struggle to get through this unless you really get some, really positive sentiment for oil particularly. It is climbing slowly. There isn't massive strength. I think it's still ideal for dip buys. Okay, something perhaps around here, maybe 6,750 is going to be ideal. And that would just be so you can hold for longer term gains. So definitely a reasonable swing setup. And it's just because of this, this momentum, essentially. Your job after you see momentum is just to get a reasonable pullback. So if you buy now, you're buying into resistance. So you need something like this, perhaps, lower down. Good pullback to your key moving averages. If you go on your weekly, you can really see the potential, like I said, for those swing entries. I mentioned, as a key area, all of this support. You can see clear rejection down there. It's obvious where the long side bias remains. And many of us in the room are long. I think, like I said, it might take a minute just to get through this. So if you want to take gains early, you absolutely could. But if you swapped your monthly now, you can see that there's considerable room to the upside in line with these candle wicks. So, that's why I mentioned, holding it for a swing. If you do have a little look, you can see key resistance there, and many other candle wicks in the way. Those are going to be the only things that prevent you from going straight up, and why it might take time. So that's why I dip buy as well, because if you dip buy, you can get the stages of stopping and then coming back and then hitting another resistance and coming back. And generally, when the structure of price action is like that, you can accumulate more gains because you'll just be buying after every single period of rejection. A bit like you've had here, you could have bought each dip in this tiptoe fashion, if you like, to the upside. So buying dips, really important. And yeah, I think you've got room to the upside. You can see you're still a reasonable amount of way off your 100 MA and your 200 MA, sitting $72 per barrel and 74. So I'd probably accumulate shorts higher. I think it's a little bit early, maybe nearer 71, 72. Thanks for watching. See you in the next one.